Welcome back to the Wall Street Podcast. Today we're doing a deep dive into a fresh report from Morgan Stanley. It's titled, Who's Upgrading? Early iPhone lead times flat to higher YY. And it just dropped yesterday, September 16th, 2025.
That's right. This report gives us an early look at the iPhone 17 pre-orders globally. It's basically assessing the demand versus supply picture compared to previous launches, trying to gauge those upgrade rates, and what it means for Apple near term.
Okay, so what's the main headline here? What are they seeing?
The overall trend is that iPhone 17 lead times are tracking, well, in line or even a bit higher than last year, and supply seems better this time around. So together, that suggests maybe stronger initial demand compared to the iPhone 16.
Stronger demand, hinting that maybe those stretched out replacement cycles are starting to shorten up again.
Exactly. It points towards some stabilization, maybe even a bit of acceleration there.
Interesting. What about specific regions? Let's start with the U.S.
Sure. In the U.S., the average wait time for an iPhone 17, and that includes the new Air model, is about 15 days right now.
15 days. How does that stack up year over year?
It's up slightly. Just about 0.3 days longer than the iPhone 16 cycle at the same point last year.
Yeah.
So fairly stable, maybe a touch stronger.
Okay, a slight uptick, but you mentioned the trend is stronger internationally.
Yes, definitely seeing more movement there. Average lead times internationally jumped about 3 days just in the last week. And compared to last year, they're also roughly 3 days longer in key places like China, Japan, the UK, Germany, France.
3 days longer internationally. That's a clearer signal.
It suggests pretty robust global interest, yeah.
Now, does it vary much between the different iPhone 17 models?
It does, and that's quite revealing. The top-end iPhone 17 Pro Max, its lead times are pretty comparable to the 16 Pro Max last year.
Okay.
The iPhone 17 Pro, however, has shorter waits in the U.S. than its predecessor, but internationally it's actually up by 2 days year over year.
A mixed picture for the Pro. What about the standard iPhone 17?
That's where things get really interesting. The base iPhone 17 model shows significantly longer lead times. We're talking 15.5 days in the U.S. and 19 days internationally.
19 days internationally for the base model.
And get this, in China, the wait for the base model is 30.5 days. That's the longest we've seen for that tier in 2 years.
Wow. 30 days in China. That really stands out. What about the new Air model?
The iPhone Air, which replaced the Plus, actually has shorter lead times compared to the 16 Plus last year, and it should be available in stores this Friday.
Okay, so the big story seems to be that base model demand, particularly overseas. Given all the talk about people holding on to phones longer, what's actually driving this early demand, especially for the standard 17?
Well, the anecdotal evidence and what Morgan Stanley's hearing is that a lot of these upgrades are coming from much older phones. Think iPhone 12.
The supercycle cohort from a few years back.
Precisely. And for someone coming from an iPhone 12, the 17 is a massive jump, right? You get a larger display, 120 hertz promotion, the always-on feature. Plus, they're highlighting things like double the battery life compared to those older models, 6 generations of chip improvements.
Huge performance difference.
Absolutely. And significantly better cameras. There's also a bit of an ecosystem play. The new AirPods Pro 3 live translation feature needs an iPhone 15 Pro or newer hardware.
Right, so that could nudge some people with older phones who want the latest AirPods features.
It's a potential incentive, yes. A clever tie-in.
So, putting this all together, the lead times, the potential drivers, how does Morgan Stanley view Apple as an investment right now?
They're sticking with their overweight rating and their $240 price target. The core thesis really hinges on a few things. This large base of iPhones out there, due for an upgrade, the introduction of new AI features, which are expected soon, and Apple renewing its focus on changing up the device form factor.
And they expect these to drive growth.
Yeah, they see these factors accelerating iPhone growth starting in fiscal 2026. And that's on top of what they see as consistent double-digit growth in services, stable gross margins, and moderate operating leverage.
Meaning profits could grow faster than revenue.
That's the idea. As sales grow, those fixed costs become a smaller percentage.
Okay, so for investors tracking this, what are the key things to watch in the near term to see if the cycle plays out as expected?
A few key events. First, watch the in-store availability and initial sales of the iPhone Air starting this Friday. That gives a quick read on that new model. Second, keep an eye on any movement regarding eSIM approval in China. That's still a potential factor.
Right.
And third, expect Apple to probably adjust its iPhone production plans for the December quarter sometime in early October once they get a clearer picture of the initial sell-through.
Makes sense. So stepping back a bit, what does this tell us about the average consumer? We see strong demand, especially for the base model, and people upgrading from phones that are 4, maybe 5 years old.
I think it signals a potential shift, or maybe a confirmation of a shift, in how people buy phones. It suggests the public is willing to spend, but perhaps not every single year, for incremental updates. They'll invest when there's a substantial leap.
So things like the AI integration they're talking about, the big camera jumps, noticeable user experience changes,
Mhm.
that's what triggers the upgrade now.
It seems that way. It looks less like automatic annual upgrades and more like considered purchases, driven by real tangible value over multiple years.
A move towards value-driven, multi-year replacement cycles.
Exactly.
So a final thought then. If hardware demand, especially for a core product like the iPhone, is increasingly tied to major innovation leaps and integrated AI, how might that reshape the broader consumer electronics landscape?
That's the provocative question, isn't it?
Yeah.
It could push the entire industry further in that direction, influencing R&D priorities, marketing, and ultimately how long we all expect our devices to last and when we decide it's truly time for a new one. It might fundamentally alter product life cycles and buying patterns across the board.